Hello and welcome to the look ahead for Thursday, the 27th of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So we've got quite a quiet day tomorrow as far as data is concerned in Europe. In fact, there is very little coming through. We do have a speech by ECB President Lagarde later in the day. US is where the focus is going to be. We have US jobless claims, Q4 GDP data, as well as home sales to be watching for. But I think also, obviously, the focus is going to be very much on the Trump trade tariffs. If there are any developments as far as they're concerned ahead of the April 2 expected implementation day. Just as far as what we'll be watching, obviously we've got sterling US dollar a little bit in focus today and heading in tomorrow with the US data tomorrow and after the Chancellor's budget today, as well as UK CPI data, which came in weaker than expected, easing to 2.8%, down from 3%. However, that is likely to be short-lived given that inflation is expected to increase as we head towards Q3. Now, as far as economic data is concerned, tomorrow, US GDP data. It's Q4 GDP data, so that is looking a little bit stale now, given that that was almost, well over 3 months ago. We've also got jobless claims. Q4 GDP is expected to confirm the 2.3% quarter-on-quarter annualized level. We've also got jobless claims figures, which are expected to be 225,000, up from 223,000. Now, this is sterling US dollar. As I said, we had the Chancellor's spring statement as well today. But all in all, we saw the weakness in the pound before we got to the spring statement. That was then sort of sent the pound a little bit lower. Didn't have a massive impact, and that's basically because the spring statement didn't bring too many surprises with it. We obviously saw the growth forecast cut that was expected from the OBR to 1%. We've also seen sort of inflation expectations expected to ease to 2.1% by the end of next year, at 3.2% at the end of this year, so a little bit higher than the Bank of England's forecast for the year. So that's what we're looking at. This is sterling, pound, US dollar. This the price ran into resistance there at the 130 level. Now, since then, we have seen a strengthening in the US dollar, and that is just weighing down, we'll see, on cable. It's still trading within the rising channel, but it does look like we could be moving towards a reversal pattern. We're testing the 129 support as we speak. I think if we get a break below the 128.60 level, that's the lower band of the rising channel. It's also the low that we saw at the beginning of March, and that could create a lower low and expose the 200 SMA there at the 128 level. Just as far as euro US dollar is concerned, haven't had too much data from the Euro zone region. Obviously, Christine Lagarde is speaking tomorrow, but the US dollar has been driving the recent recovery in the US dollar has been driving these near-term losses in Euro US dollar. We have been hearing sort of, much about the reciprocal tariffs, which are expected to come in on April the 2nd. Now, there has been sort of some optimism that the scope will be narrower than initially feared, and that has helped the US dollar recover. And that combined with optimism surrounding the outlook for the US economy after Jerome Powell's appearance at the FOMC meeting last week, where he didn't see a recession in the US as being a base case scenario. So we have seen that strength of the US dollar just pulling on this pair. Again, we found that it topped out there at the 109.40, which was the November high, pushing lower, just testing the 108 level at the moment. If we do get a break below there, that could see sell-off accelerate towards the 107.40, which is the 200 SMA. And then below there, we'll be looking at the 106.20 level. If we find that this level holds, then we could be looking at a rise. Buyers would need a rise above 109.40 to create a higher high and bring that 110 level into focus. Just sticking with the currencies, let's have a look at US dollar, Japanese yen. This is interesting because we're just seeing this breakout of a recent channel. So we've seen this downward channel. We saw a bottom hit there at the 146.50 level. And we have seen that recovery in the US dollar is being reflected in this pair as well. We've seen that sort of rise above a couple of key levels here, just sort of above that 150 level as we speak. But the 50 SMA is crossing below the 200 SMAs. That is generally considered a sort of bearish signal, death cross, but got the RSI pointing higher above 50. So, I mean, it does look like this could be a breakout, but we would need to see really a rise above that 150.65 level. That's a 38.2% Fibonacci retracement from the 139.50 low to the 158.90 high. That would help convince buyers that they're going to continue rising. But that will also take out the 200 SMA resistance as well. On the downside, support to be watching, you've got that 149.50 level, and we've also got this 148.60 level, which was the low that we saw back in December. Just finally, very much US centric, because obviously the data that we're seeing tomorrow is very much related to the US, and obviously trade tariffs also being a big focus right now. This is the S&P 500. Again, we've seen the solid recovery as the moods improve towards the outlook for the US economy, with optimism that trade tariffs won't be as fearsome or as severe as initially feared. That's helped stage a recovery from 5,500 up to the 200 SMA at the moment, 57.70, testing that right now. Buyers are going to need to close above that in order to bring the 5,900 level. It could prove to be a tough level to get above. It's also the low that we saw in January at the start of this year. On the downside, if we see that price faces rejection there, be watching on the downside for 57. Sort of 57.15. That was the low that we saw back in November 2024. So I hope that you've liked everything that we have seen here today. And if you have, then please do give this video a like. Otherwise, I will see you tomorrow.